Rob, I'd say on any other day we'd have this downgrade of Italy by S&P weighing on the markets, but of course we've had this aggressive sell-off and it appears the markets just didn't want to push any lower today. What are you taking out of this turnaround in trade?
Yes, quite surprising. We sold off quite heavily yesterday and then we opened up about 200 points down, but the buying came in quite aggressively, and I think with the Fed meeting this week over the next 2 days, I think a lot of people are expecting some maybe more stimulus coming in from the Fed in the States, and people coming to look for maybe some bargains and some shorts also covering their positions. So I think what comes out of the Fed in the next 2 days will be quite interesting. Bank of England also said they might carry on with some more stimulus as well. So I think world markets expecting some type of stimulus now that this Greek issue and Euro issue is not getting finalized, and they're expecting the central banks to put some stimulus back into the economies.
And perhaps that's what's buoying gold at this stage as a hedge against inflation being seen as a possible quantitative easing comes to the fore.
Well, yes, I think it's risk of default, and then again as inflation as well. So if stimulus comes in, gold will probably still stay firm as a fear of inflation, but I think also as a hedge against sovereign debt default. So gold has got two really good aspects going for it at the moment. It's broken on a rand level, I think a nine-year trading phase, and it's breaking up beyond that. So looking very positive for gold, and for the first time in very many years, gold miners in South Africa looking good as well. And it looks like some foreign flow finally coming into our gold miners in South Africa.
Let's move on to company news here in South Africa. A lot of news coming out today. Grindrod share price reacting positively to the news that it's selling a 22% stake to the investment firm Remgro in order to repay its debt and embark on capital expansion. Do you think this is good for Grindrod in the medium term to have a shareholder like Remgro?
Yes, I think so, definitely. I think that they need to move away slightly from shipping and get a slightly broader based income from the different divisions that they do. I think Remgro is a good holding company to have. They've got a lot of expertise that they've gathered over the years, so I think it's a very good partner to have. I think they do need the cash to grow as well. And I think a very good sell of 22% for Grindrod, and obviously it's at a premium of nearly 5%, so all good in the short term for Grindrod shareholders. And I think long term for Remgro, it's a good acquisition as well.
In a sector that continues to suffer, construction PPC delivering bad news once again, 25 to 30% drop in full year HEPS expected there, coming off a low base, and we've had positive news about some turnaround in the second half of the year. But is it time to be buying into a construction stock like PPC when they continue to deliver bad news?
Yes, it's just parts of the economy just don't seem to be getting going. They've got a big presence in the Western Cape, and Western Cape really slow, still battling there. Can't really make any revenue out of the Western Cape and losing cash there. So the economy, it's slowly ticking over, and there's pockets of it that are doing well. But as a whole, construction under a lot of pressure, and obviously as a cement maker, they're under pressure as well. They don't have too much flow into the rest of Africa either, and I would probably wait another 4 to 5 months until I went into PPC and into the construction firms. They have been hit heavily on the stock exchange. Their prices are really low, but I think you've still got 3 or 4 months. You can put your money somewhere else and wait a few months before you start entering into the construction and cement companies.
And we keep on getting bad news from them, and PPC stock today reacting negatively to that. So if that continues, we could see the stock continue to fall. Let's move on to the food sector. Pioneer Foods, full year HEPS expected to be down by between 20 and 30%. If you compare that to the likes of Clover, which managed to treble full year profits, that company isn't doing so well.
Yes, slightly different businesses, but both obviously producing foods. Pioneer Foods, in their little trading note, we need to get more detail from them, but they don't seem to have passed on any of the input costs. And we see that Clover said yesterday that input costs are a concern for them. And in all of their products, they put price increases through all of their products, and you start to see that filter through in their earnings. It looks like Pioneer Foods haven't passed on those input costs onto the customer yet, and obviously if they don't, you'll see what impact it makes to the bottom line. So Pioneer Foods battling. I think they had a 650 million rand competition fine last year. So I think still finding their feet, a very good business, and quite a defensive business. I think going forward, as they pass on those input costs across to the retailers, they'll start to improve. So I think it's something to look at going forward in the next 6 months.
A stock that could be considered even a growth stock, although it's often grouped in the defensive sector, is Letha Healthcare. A strong performance there for the half year. But looking forward, it looks like growth is set for that company. It signed a deal with an Indian generic drugs manufacturer. Could perhaps be signing more of these deals. What do you make of the likes of Letha?
Yes, I think the deal with the Indian generic company is very good. I mean, they've got 3 businesses which they manufacture medical devices, then they've got biotech and then pharmaceuticals, and I think they were lacking on the pharmaceutical side, so I think a very good acquisition for them. We'll have to see what type of products that Indian generic company is producing, and is it AIDS drugs and HIV drugs, and what type of mix of medicines they have. But it looks very good in the short term, and they're growing very quickly. And defensive in that it's from the pharmaceutical side, but growing nicely and something to look to have in your portfolio.
One last company that reported today, Cashbuild, 28% rise in HEPS there. It appears cost management is what's helped that company in this period.
Yes, input costs in South Africa are something that we have to look at, and as soon as you start to manage those costs better, you start to produce good revenue. So, don't really look at the company in much detail, but earnings are looking quite solid, and they've Digicor gone through into mainly in America at the moment, and they should start to get quite a nice increase in revenue just from this weaker rand that we've started to see, going from around the high 6s, 690 all the way now to 760. So I think in the next few months we'll see quite a big earnings increase going forward.